The following is a presentation of TFNN.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. We get the Dow down 111, Nasdaq off 33, S&P's off 12, gold down 48 bucks, silver off $1.70, platinum 41. Just name any commodity, folks. Copper down 9, oil down $1, bonds up 19 ticks, and good old King Dollar is only up 300 ticks, and it's having the market take conniptions, man.
It is.
Well,
King Dollar absolutely had some strength in it.
Hey, Ben took away the punch bowl. Do you know what the patent is? The patent is the punch bowl.
Oh, is that what it is?
Oh, it's
I love
the punch
it.
bowl.
Okay, I love it.
That's the patent, man. That's the patent, no doubt. And when we talk about beautiful Mexico, right?
Yeah.
Kyle is...
Oh, is he down there fishing?
He's on the jet right now.
Oh, is he really?
He's going to be fishing this afternoon. He's so
Oh.
excited. Yeah, he's going to be down there fishing for a week.
Oh, that's cool.
And, you know, I got to remember the place that he is, but I was looking at it. So where he is, so check this out. You talk, if you go fishing, folks, you're going to know this right off the bat. But where he is that you're on the shore, right?
Yeah.
And you only go a quarter mile offshore.
Yeah.
Drops down 800 feet.
Does it really?
Yeah. It's a cliff that drops.
That'd be a nasty step.
That's where all the big fish are, man. All the big fish. Totally.
Wow.
Well, okay, so market-wise out here. Now, when we were on the air yesterday,
Yes.
what is pretty cool, was it? Oh no, I was in the den. It was in the den yesterday. It was happening. Okay, so when the minutes came out, what the SPY did is that you did the ABC structure down. It missed it by 20 cents, by the way. Okay.
Right.
So watch what you have now, folks. Okay. So all you did, you came back up to ICE. You did it with light volume. It's 7 million versus the 12 million. Right. Bottom line, it's going to go right now, and it's going to go after the 140.05. Now, if hit 140, you break the 1.05, 140.05, you're going to see some real destruction, folks. So what you're going to see, you can see another 2 points down, which is insane, which is another 200 on the Dow. And at 10:30, at 10 o'clock in the morning, yes, get plenty of time to build cause. Because then all you do is you take the top to the bottom. Particularly, now this is how this goes, folks, in my head anyway.
Yeah.
Because the market has stayed up so long, the bulls are acclimated to that. Okay, and it's like they're going to try to come in, buy.
That's right. Buy the dip.
The bears are acclimated for fear. Like, oh no, it's going to come back, folks. It ain't coming back. It's done. Okay, because the way that these bigger accelerations come down kind of work like this. Okay, you get it once, you get it twice, it doesn't go. It comes all the way back. When it's coming back yesterday, I was digging it, man.
Yeah.
And then when SanDisk came out after the close, right? I says, oh, that's it, baby. And the reason I say that's it, what happens is that inside SanDisk itself, the chips can kind of lead many times.
Yes.
You know?
Yes.
And it's like, oh, the chips are saying they're going to sell less? That's a big number. So, if you look at SanDisk, SNDK, if you want to see something that's setting up for disaster, not disaster, because SanDisk loves doing this, folks, but it has two gaps. Don't get in the middle of SanDisk, folks. SanDisk is going to have a third gap that's going to take it somewhere down to $40 or under $40. You know, I mean, that's the way this thing is setting up. It's going to have the volume breaking the last time it came down there. I mean, the whole thing is wild, man. And it's particularly wild because everyone's bullish. You know, it's not even that everyone's bullish. It says everyone thinks that the markets can't pull back.
Right.
And that's when it always happens.
Right.
So, volume-wise, let's see what we got out here, because there's no doubt since last October we hadn't had any juice, and it's not bad. The 131, that's not the end of the world. The Nasdaq's not the end of the world. Yeah. So we're going to need more juice as it's getting lower. That's the way this is set up. Now gold, gold is screaming. You know, you had the large weekly ABC structure. That's been confirmed for a couple weeks. Now you get the daily, and that's going to be confirmed too. We're already 115,000. It only needs 145,000 contracts. So, 1550 is game, 1530 is game. So that's going to be intense, man.
And 1523 would be nice. Because you can get down and test the actual swing point.
That's right. No, there's no doubt about it. And, we'll see, you get Newmont, the king dog, inside the gold market, largest gold stock out there, and that little baby just can't handle it. look at this. This is just pretty amazing, man. I mean, it's like, okay, you know, if markets aren't screaming, gold's still at 16 something. And
the equities are...
Yeah, the equities
are getting smoked.
Well, yeah, they're down 30, 35, 40%.
Now, in Newmont's case, that was a daily chart.
Yeah.
The volume on that for today, for the first 42 minutes, what's the volume that we've got on there today?
3.3 million versus 9 yesterday, 3.2.
Yeah, and you're only 40 minutes into the trading
Well, this confirmed
session,
another ABC down yesterday.
Yeah, and so what's the next swing point on the way down?
This, conservatively, I can do the... Okay, so if I do the conservative one, the most conservative ABC I can do, this is what you have with Newmont, folks, okay? You can take the top of the trend,
right.
But I'm looking and say, okay, there's 3 different ABCs in here, so I'm going to take the smallest one.
Yeah, 3 different swing points that you can choose.
If I take the 54, you know, only down to the 50, you get $4, which brings it to 48, but it's at 48. You know, that's the most conservative. You know, my take on it's the 2009 level that these want to get to. Now, if that's the case, folks, let me tell you something. That is saying that this market is going to get toasted and roasted, you know, because 2000 and
so in the case of Newmont, you think the next test is going to be when it gets down into the $43 area, that next
and
swing
see way over
right
to the left, see 2009, see that big spike? That's where they want to go.
Yeah.
And it's just not Newmont, folks. It's all of them. They want to get down to that. It's a huge spike in 2009. It's
like it was January 31st, the week of January 31st.
Think about that for a second. We're at 2012 now, right?
Yeah.
Pretty intense. It's pretty intense in the concept that, you know, where we are, even when gold has pulled back this much. But that's telling me, you know, that oil's next, the oil service is next, and the market's next, and we get from now until probably going all right into October.
Yeah. Now, what's cool about this is actually if it pulls back into that area, and we're talking about Newmont here, okay?
Right.
So that's where you got the volume.
Right.
So you know the bottom of that candle is $37. The high is $45.
Right.
You take a look at just a normal retracement from the lows to the high.
Right.
Is $41.
Yeah, that's beautiful.
So nothing really wrong with it.
No.
I mean, assuming that the volume dries up as it gets into that area,
and assuming you don't own it on the way down.
Well, that's right.
No, exactly.
For sure.
Exactly. And unfortunately, there's a lot of folks that refuse to get out of gold equities. And, you know, in fact, the next gold show, folks, I'm going to be speaking. I actually kicked the show off. It's at the New York Marriott, at the Marriott in New York, and that's going to be on right after Mother's Day, Monday and Tuesday after Mother's Day.
Okay.
So
sometime in May.
Yeah, I'll get the date. That's shame on me.
Is Mother's Day always the same day of the year, or is it the same Sunday?
I think it's the second Sunday always.
Second Sunday always? Okay.
Right.
We should know that, shouldn't we?
Hey, listen, man, I better know it. I got married that day, too, May 10th. Yeah, totally. I love it. Okay, so
yes.
buy and hold is a thing of the past. You know, if that was the thing of the past, that would be pretty cool, but it's not a thing of the past. People get sucked in every single time.
Yeah.
So, we got... Yeah, it's going to do the next leg down.
Yeah.
Let's see if it got the juice. It's getting the juice. All's it needed on this leg. So watch how this works, folks. All's we needed, 1040. You only needed 4 million shares. It got 6 million. Okay, this is done. We're going to 138 right now. That's a big leg down. You got the volume, you got everything.
Yeah, and you know, just so I've been watching just the 30-minute ES Mini because it's been making so many nice patterns out there.
Right.
You know, just the ABCD takes you 139.
Yeah.
And 1390.
Right.
And quite frankly, the candle that we've got going on right now could widen up here, and then it's suggesting no, we're going to go a little bit lower, 1395, 1385. If I could only read the numbers on my charts, I got to get even better glasses. You know what I did this weekend that was kind of cool? Is, went up to visit my daughter.
Yes.
So staying up in a hotel up there.
Right.
And it's the first time I did it, but they had nice big flat screen television set.
Right.
And so on the back of it, they got the RGB cable.
Okay.
So I had my computer there, so I hooked into that, plus another monitor that I had.
Right.
It was great. I was on this big screen because it had good resolution, but the numbers were nice and big.
Isn't it cool?
Yeah.
No, listen.
It's like, oh my goodness, that's good.
I watch us on Tiger TV.
Yeah.
At home, I have a Google TV, internet TV.
But that's to say, normally I just use regular computer monitors, like the ones that we've got here.
Exactly.
And this one was on a nice big flat screen. I wanted to see what the resolution was like, and I was like, wow, that's pretty cool.
It makes it much easier. You can think easier, can't you?
Yeah.
No, you can think easier.
That was pretty cool.
Yeah, there's no doubt about it. No doubt about it. So let's go over to Apple. Apple, no doubt, Priceline, we'll look at both of them, have held the market up. And, we only get 5 million shares right now. So Apple, under breakdown, folks, Apple has to basically go over 50 million shares. Now, that's not going to happen today. Now, what you do have is that you got a little island up there. Yeah. And we know that
it has
Apple,
a pattern. It has a pattern of creating those islands.
It does. Yeah. It loves it. And when it does it, it does a deep retracement. Last time it went, from 426 down to, well, it wasn't that bad, to 360, 40, 50, 60. Well, yeah, that's 15%.
Yeah.
You get out 15% with a $600 stock, you're down $90. Priceline, PCLN. Let's see what we get happening with Priceline. And Priceline is off $8. That's nothing. That's a joke.
It had nice volume yesterday.
Yeah, it did.
That thing's had some nice volume. What Priceline has had along the way, it's had some nice volume.
Yes, it has.
Periodically.
Yes, it has. No, there's no doubt about it. There's no doubt about it. Two stocks can't hold everything up. That's what it comes down to.
Yes.
Because so watch, folks, how this is this would be a technical, fundamental technique. What happens with large money managers is that as this is unfolding, what they'll do first is say, okay, let me get rid of my dogs, right?
Right.
Then they see it unfold more. They say, oh, hold it. We're not going to give up all of this. That's why you'll see the strongest stocks, they won't go until later.
Right,
There's no doubt about it.
Makes sense. It's just that's logical.
It's totally logical. You want to hold the strong ones as long as you can.
Sure.
But what does happen is that once the first manager lets go, and everyone manages, say, let's say that we know you're different firms, but I know that you have a few million shares, I know I got a few million shares. All I'm thinking is that if Steve sells his first, I'm going to get less.
That's right.
No, big time. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, we appreciate you being out there. The Dow's down 145, Nasdaq's up 40, S&Ps are up 14. You stay right there, folks. We'll come right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfn.com and sign up today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We get the Dow up 146, NASDAQ down 41, S&P's off 15. And Steve and I were just talking, the diamonds, folks, got some big volume, man. When we're talking big volume, we're talking... they only needs about double what we have right here, and it's going to blow out the whole upthrust that was in place on the 13th. It's not even that. That's 8 million.
Exactly, and you're already at 5.5 million.
This thing's done. Now,
less than an hour into it.
And watch this. This is pretty cool. I mean, when you take a look at this, if you see that it's been talking, walking, and squawking in a huge way that there's nothing here anyway. You know, if I take the first leg, you kind of like that.
Yeah.
If I take the second leg, and what I'm talking about channel-wise, folks, you like that. You just jump the whole channel.
Right.
Now, if you've been to one of my master traders, or even if you just read my book, folks, you know that a conviction jump is you jump the channel with volume.
That's right.
And that, we already have it. You have it.
Yeah, absolutely.
Now, what that also says is that says you're going back to the beginning of the whole deal. Beginning of the whole deal, that's 10,800. You're getting close to my 825.
I love you.
Totally, man. Thank God someone does. Let's go to Mark in Massachusetts. Hey, Mark, what's going on?
Hey, Tommy, I took your advice.
Yeah?
I took your advice. I dumped Verizon. I went to Sprint and got an Evo.
Oh, good. Yeah, that's an Android device, right?
Correct.
Yeah, that's what we had. Isn't it good?
Yeah, well, I tell you, I did a class in new age phone technology. Oh my God, this thing is this thing is like where's that? They try to be a bull on a day like this.
Yeah, that's not going to happen.
The only thing you need is you just need to go to the homepage of TFNN.com, and over on that right-hand side, click on that little area there, and then bookmark it. Figure out how to do that,
and it brings it right up.
Boom, you got us.
That's
on.
right.
Now, okay, so you see, folks, this is not a Sprint commercial, but let me tell you something. You know, I've had Sprint phones forever, and it's the rest of my family. I have 5 Sprint phones, you know, in the company.
Yeah.
But everyone else has Apple phones, right? And Angie's paying a fortune, you know, for all these Apple phones.
Right.
Okay.
Right.
You don't pay with Sprint, folks. Okay. It's just amazing. I mean, they have it together, and now, you know, especially because you're downloading so much. There's
Sure.
It's great, man. It's huge. It's one bill. What I always liked about Sprint, it was always one bill.
Right.
So it's like, okay, how many? One bill's one bill.
Yeah. I wanted to look at the financials, guys. That seems to be one of the leaders down. And a more important question, Tommy, if I understand the way you and Steve are talking, is this the beginning of the run to 825?
Well, in my case, I've had the beginning of running 825 many times. But to be here now, yesterday's gone, tomorrow's not here. The run to 825 can't be just at one time. What I would say, is that, this is the beginning of a very deep retracement that is going to put some damage on this market for 2 or 3 months, and then you'll get some kind of a pop in the middle of the summer, and then there'll be more damage going right into September.
All right. And do you think we'll have a bounce tomorrow, just a counter trend bounce?
Not tomorrow. No. The way that normally a large correction starts is this. Everyone's going to be waiting for a bounce. If you're not in, get in. Let me tell you. Put a stop in. But bottom line, there's going to be money gets taken very quickly. If I learned anything in the marketplace, takes you, like by the end of the day today, you'll hear me come on the air this afternoon and say, okay, well, here you go, folks, okay? It took 3.5 months up here, and it just took 6.5 hours and took everyone's money. That's how it goes. And the quicker, folks, that I don't care whether you're a bull or bear, the quicker that you understand that, that's the only time, if you don't understand that, folks, you should get out of the market. That's how money's lost on a continual basis. If I've seen anything in the last 30 years, what blows my mind is that why someone doesn't understand that.
Yeah.
Because it happens. If you pay attention to it, that's how it goes,
Tom, is the weakest sector from your standpoint the XLF? That's what I've been listening to all morning.
The energy sector has been the weakest out there. XLE actually has been the weakest.
Yeah, the XLF is the strongest.
Yeah.
Oh, really?
Even today, it doesn't have the volume to bust it down.
Yeah.
It's coming in. I don't have it up on my screen here. I'll pull it up, but at least the volume during the first hour. Where is it? Right here on the XLF. The XLF is going into that. You got to pay attention to March 13th, which had 184 million shares. And so far today, with an hour into it, you've done 22 million shares.
Yeah.
It needs more juice. Needs more.
Cooking, brother.
All right, cooking, guys.
Have a great one. Have a safe one. When we come back, folks, we'll talk about this XLF because I think the way that the XLF can fall apart, there'll be a bomb that's dropped. And there's one on There's one on J.P. Morgan this morning.
Okay.
There's a disclosure on J.P. Morgan that's pretty intense about the Lehman deal.
Okay.
Steve Rhodes, Tom O'Brien, you stay right there. We're coming right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We get the Dow up 61, 161, Nasdaq down 45, S&Ps are up 16. So when we talk about the financial sector, folks, what you had out here this morning, if you want to see just, you talk about banks robbing everything. Jamie Dimon, J.P. Morgan, let me tell you, they're the best robbers without an M16 I've seen thus far. So out there this morning, this is what you have. This goes back to the Lehman downdraft, folks. J.P. Morgan this morning paid $20 million to the CTFC, which is a joke. I mean, that's nothing, right? That's a rounding error, as they'd say in accounting, right? And what it is this. Is that, okay, so I want you to picture something. The reason J.P. Morgan, this is interesting because this has to do with MF Global also. But bottom line is that Lehman, J.P. Morgan was one of their trading partners, right? All of Lehman's customer money was at account at J.P. Morgan. When Lehman is getting loans off anyone, when you're getting broker-dealer and bank loans, you don't supposed to be getting loans off your own customers' money. Yeah. Bottom line, go read the Journal, read the New York Times this morning. What you're going to see is that for 2 years, J.P. Morgan was allowing Lehman Brothers to get loans off their customer money.
Using that as the collateral.
Using that as the collateral.
Yeah.
Okay? Bottom line, absolutely illegal. Absolutely illegal. So they get fined $20 million. The thing that's amazing is that when you watch that movie Too Big to Fail, right, you can imagine why the guy that was running Lehman looked at him and says, "What are you talking about? Well, you're not going to give it to me now? You've been giving it to me for 2 years."
Yeah.
All of a sudden you're going to be, the Blessed Virgin Mary?
That's right.
Really?
That's right.
Okay. And of course, in the MF Global case, folks, what you have is the same deal. It was customer money there, and they grabbed the money. They basically took it. So the reason this came up is that you need a bombshell like that, and that's not enough right now to basically croak that. But what could really put some damage into the financials is a whistleblower on the inside saying Because on that story that I'm just talking about, they're claiming that no one knew what was going on. Same deal. It's just beautiful. Get $20 million, no one has no idea what's going on. What would get a wrench into a lot of that is if you did have a whistleblower inside the deal and laying the whole deal out. And hopefully they don't get taken out before they get in front of someone, you know. But that's it.
No.
Yeah.
Sure. Well, I mean, there's in the financial sector, there's a number of bombs that can go off. You still got the European bombs that are out there.
Yeah, for sure.
And it's still obviously the weakest sector of all, having only been able to not even be able to do a dead cat bounce.
Yeah.
From the highs to the lows.
Oh no, for sure.
The highs going back into 2007, the lows put in March 2009.
Yeah, and there goes the euro. The euro,
yeah. The euro is really
we got 131. She's on his way down to 130.
129. I think it's making a new ABC down.
Yeah. If she gets action into that that 130, then we get 126 game again.
Well, the ultimate of the Gartley sell or buy pattern.
Yes.
Because I always take a look at it as really a couple of different exit strategies.
Okay.
One is when you get to that 0.618 area.
Right.
And then you're just simply at that stage, you move your stop up so that you're at least in a break even or profitable position. Maybe start taking some of your bread off the table. But if the candle, as you're coming in there, is a strong candle, says it wants to at least get the next floor. Wants to go visit Angie,
Big time.
upstairs.
Big time.
Floor 0.786, if you will.
Big time.
But the ultimate exit strategy on a Gartley pattern is the new A to B equals CD that it sets up.
Right.
And that's what, is possibly going on here with the euro, which would then take it in that 129 area.
Amazing. Let's go to Bill in Pittsburgh. Hey, Bill, what's going on?
Colorado.
Oh.
We're going to Colorado.
Oh, I haven't Tom. Okay, hey, Bill, what's happening, man?
Hey, gentlemen. Hey, I was looking at Petrobras.
Yeah.
I wanted to get your read on it. I was trying to buy it back in December, and I didn't get it done. And it looked like that volume support on the move up from that $23 or $22 area was pretty good. And now it's drifting down. Actually, the selling looks actually fairly good, too. I'm wondering if you think it can attack that 20, and if so, what it should look like if it's going to be a...
So you're going all the way back to the October time frame? Is that what you're looking at? What do you think?
Yeah, no, I can. Let me talk about the highs first. Let me show you something about these highs. This, what I've found, folks, is always dangerous. Now, what you did is this. You went from 20 to 30, right? And you see you get the high volume high of 31. Everything's cool, man, right? You're at $31. You have 31 million shares, right? And then, all of a sudden, you test it once with 18 million. It's like, 18 million, really? And then you test it again with 12.
12.
Okay? So you hit the high with 12. So your correlation is 12, 18, 31. And as soon as you come down off that with volume, I never even think of buying something like that until the furthest swing point I can find. Because what you have is that you've already tested the high on lighter volume, and you got to remember something. Now, that's subtle. There's no doubt about it. But what happens, folks, is this, is that at some point, the demand has to die. That's just what happens. You know what I mean? So then the whole thing changes. It changed when that monster got out on February 10th. So then what that does, that turns around and sets up, you never like to see high volume off a swing point. So then it's like, do not touch this thing, because yes, it's going to 22 to 20, and if it breaks it with volume, all of that equity had done is what? Went to ice. That's a dead cat bounce.
Right.
That's all it did.
Yeah.
That's all it did.
Well, when it came down, if you look on a 3-year weekly, it comes from 53 to 31.
Yes.
Bounces up to 43, 43 to 21, 21 to 33.
Yes.
I mean.
Well, one of the things that you want to take a look at, Bill, if you're taking a look at the weekly, is just simply notice the lower highs and the lower lows.
Yeah,
you know, because that's really that's just your easy indication. Not doing any math or anything.
It is.
Just take a look at this thing is making on a weekly basis. You know, lower highs consistently and lower lows consistently, and and it gave you all kinds of signals. It gave you a number of bearish engulfing patterns as it was making highs out there, whether it's weekly or daily.
Maybe 14's in play then.
No, it is in play. $14.70 is in play. Because on the monthly basis, it's already 5 points into the bar. Yeah.
Well, if it gets to 14, I'm going to just sell the house and put it all in.
Oh,
no.
Now, listen, you know what's so interesting about this? No, it's pretty cool what he's saying, okay? And it's cool what he's saying because, so picture this. That's about perception, folks, okay? And let me tell you, the perception inside Petrobras, folks, okay, in the world is exactly what Bill just said.
For sure. Yeah.
Okay.
Yeah, you can find videos out there and everything.
There's no doubt about it.
Yeah, absolutely.
Now let me walk you through some facts versus the perception, though. Okay. And what it is this. So, what Petrobras does, folks, one of the largest oil companies in the world, total monopoly. They have the terminals, they own the marinas, they own the pipelines, they own everything.
Yes.
But what they also own is a monster liability. Lots of them. Okay? They're blown up so many places, right? And it's hundreds of billions of dollars.
Okay.
That's what's happening with Petrobras. The reason that the sell-off continues, they have some major damages that are going to be coming due. And then the logic, that's a large question. The second largest question, of course, is that how much oil are actually out where they have off Brazil, and how much is it going to cost to get them out. But if this was 2 years ago, Bill, I would have absolutely agreed with you sell the house. And the reason being is that I love the company, and I start really. What I did is this.
No, for sure.
I saw it was coming down, and so I started digging into it. I dug into it about 3 or 4 days. This is going about 6 months. Fundamentally, I dug into it, and I says, "Oh, look at this! Look what's hiding in here."
Yeah,
and that's what's hiding. That's what's hiding in there, and they're monsters. Do you know what I mean? So,
well, you used to see them at the shows. I think
I did.
Right? They had a booth at the shows.
They had a booth. I've talked to them. So it's interesting though because they still got a great name, but you dig inside their financials and you're going to see the liabilities that are out there, and they're big ones, so they're going to have to pay. They're going to have to pay some damages. But hey, we'll see what happens when it gets down to the bottom.
It is fun to watch. It is a mover, and it is fun to watch. Hey, you guys have a great day.
You bet. No bed in the house, just a couple trees in the backyard.
Okay.
Yeah. Okay.
There you go.
Yeah.
All right. Take care.
Let's go to Tom in Pittsburgh. Hey, Tom, what's happening, brother?
Hey, Tom. Hey, Steve.
How you doing, man?
Good morning.
Pretty good. Hey, Steve, I want to compliment you on the way you handled the caller in the last hour.
Oh, thank you.
You showed a lot of class, and you can't be right all the time, and with stocks, it can be frustrating at times. But I thought you handled it, with a lot of class.
Was that Mike?
I appreciate that comment. Thank you very much,
listen,
Tom.
just stay tuned because Mike's going to be coming up next. Well, I just gave him his own show.
Hey, Tom, I got to tell you something, too. I remember, this was back in 2002, and when you first started getting into the gold market, remember the summer, we had a vicious sell-off.
Yeah, in July. I remember that well.
Yeah, and everybody was irate.
Yeah.
And I remember I was driving home from work, and you just said, you had a lot of guts. You just said, take your best shot at me. Remember that?
I love it.
And you took it, and, I respect you for that.
Yeah, well, we appreciate it. Hey, listen, we love what we're doing. So, I many times, sometimes, when you pick what you want to do, the bottom line is that, good. Okay, that's what we do. So it's a beautiful thing, man.
So, anyway, it's a tough business, and money's an emotional. Very emotional.
Oh, it absolutely is. And what one of the things that certainly I love about this business, this game is that because it forces you to take a look at both sides of the transaction. when you get into a trade, you want to be able to take a look at the bullish and the bearish phase.
Right.
What is it that you're missing that's out there?
Right.
One of the most important lessons I learned, from Thomas Watson.
Okay.
Because that was what he passed down, his culture with inside IBM was always, you can go in there, here's how you're going to get the deal, but what did you miss?
Right.
So to me, that always meant, well, when you take a look at a trade, what is it that you're missing? What's the other side of the transaction?
Right.
And so I value other people's opinions.
Yeah, right.
It's okay. It's just, you should present it maybe in a different way.
Listen, man, Mike's called a dozen times. I told you he's a psycho, man. Yeah. He's taken me to the cleaners a dozen times. I know you're out there, Mike. Then you call up and you praise us. Give me a break. You're talking to the wrong people, man. Anyway, it's all good. I could care less, really.
Yeah, I know. I've been trying to short this market, and I just decided, no, I'll wait for this market to break. Before, because I've been trying to short it the first 3 months and with no success. But looks like it might be breaking here, and I'll just wait for a retracement to get in on a short. But I'm looking at NKY. I know, Tom, you've been talking about,
right?
Yeah, we need to get into that thing.
You just got the first downdraft in it, and there'll be more. The Nikkei pulled back hard last night, 230 points. I bet we got volume, and you get volume. So,
what price point should I look at?
The first price, right now, we're at 9,800. The first price point's going to be at 91.
All right. As far as the
volume's going to be less than
NKY, because it's at 1420 right now. What would that translate to?
I think you're better off just kind of playing it off of the actual Nikkei.
Oh, that's what I'm pulling up. The Nikkei. What do you have?
He's pulling up the, I don't know if it's an ETF, NKY.
Oh, is that an ETF?
Yeah.
Oh, I was pulling up the indices. But why can't you? Okay.
I don't know if is there a...
that's weird. Look at that.
I don't know how to...
That's pretty cool. Okay, so let's see what this is. This is a... Oh, this is cool, man. I didn't even know this was out here. Okay, hold it. This is good. Okay, so it's an ETF. So in the ETF world, now you're at 1420. The first place is going to be looking at 1360 or something. What to do is this, though. I know you're out there every day, and we appreciate it. Just we want to trade this, okay, off the volume of the actual Nikkei, and that's what we'll do. And I have them every day. Steve has them. So we know what that is, okay? And that's how we'll trade it off it. Because then you're right at the horse's mouth. You know what I mean?
Mm-hmm.
So
now, when you're taking a look at the actual Nikkei, and I've got it up on a weekly chart if you're following us on Tiger TV, and what the Nikkei's has been in this downtrend channel. This is going back all the way really to 2010. The bottom of it's going back into the 2009 time frame. Now, when it hit that channel last week, you can see it hit it, and it gave it up, closed back inside the channel. But this week is even more important than last week, and the reason I say that is because you've got this huge bearish engulfing candle. This says you can go all the way back down to the bottom, potentially.
Wouldn't that be pretty good?
Yeah. So just simply be patient here, okay, Tom?
All right, sounds good.
Brother. You stay right there. Steve Rhodes, Tom O'Brien will be coming back with you at the Dow. Down 156. NASDAQ got 47. S&P's off 16. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We get the Dow off 171, NASDAQ off 52, S&P's off 18, gold's down 54. It's interesting, too, whether we talk about the gold market, and we say when I first got in the gold market.
Yeah.
The correlation when I first got in there, no one believed it. And now... we opened the Tiger Real Estate Fund.
Yes.
And it's wild, folks. And if you are an accredited investor and you want some information, you can email, let's see, is it, I got to get that right. It's TigerFund at TFNN.com. But the bottom line is that what's happened, it's the same thing, and you can't blame people, okay? But it's the same thing as in the gold. That people won't get filtered in until you're 30-40% off the lows, which is just absolutely wild, man. But that's how it goes, and it totally makes sense too. There's no doubt about that. Do you know what I mean? If we go over to that gold market just for a second, now what you do not want to be doing, folks, is stepping in front of this. When I was just talking with Steve, this is a 1.5-year consolidation. And what you have is that now you get a daily ABC down, you get a weekly ABC down, and this baby wants to get into those lows. Now, it's going to be too easy just to get into the lows, For sure. Yeah. It's like, okay, hold it. You're down, so it's like, okay, now, the longer this is happening, I said to myself, you know what, that's going to be too easy. So that means that it wants to blow those out, and you'll probably get some kind of a down thrust.
So how this week ends, which is tomorrow, a shortened week, is going to be very important. It's going to be very important, at least for me and my work. Okay. And when you take a look at the last time that there were, significant highs put in the NASDAQ, I'll just simply go back to 2007. So in November 2007, the week of November 2nd, 2007, it hit 2256.25. And the following week was when you had this big, huge bearish engulfing candle. And just using that, folks, as signals that are out there, because since then it hasn't made a bearish engulfing candle. And it's just really important to notice that. If you take a look at where we're at today, all that means that the Nasdaq needs to do the NQ. Okay, so I'm looking at the continuous contract here. If it closes below, let's see here, 27.29.75, and you're 27.30 right now.
That's easy to do.
Yeah, it's real easy to do. That's why I say you need to watch that out because you can see it gave you a signal.
It's going to close below that today.
Gave it,
and you got one more day.
It's tomorrow. You got to get.
I know. I understand that. Yeah, you got one more day.
That's right. And just like we were taking a look at the the Nikkei. What this thing is doing here on a weekly basis is huge. So there's some signals out there, folks. Absolute signals.
Now, listen, don't forget, folks, you want to understand how these markets move. April 13th, 14th, Steve's going to be doing Master Trader Series right here, our headquarters. That's a Friday and Saturday. He's going to be at Boston, Massachusetts, April 27th and 28th. Spring is happening in Boston. That's a beautiful. You're going to love it up there. Right to Regina's first, right?
Oh, yeah. Regina's is supplying us with food. We're going to have the Pizza Wars. We're going to get Regina's one day, and what's the other one that starts with an S?
Santopios.
We're going to have Santopios the next day.
And then you have to get the desserts at Mike's Pastry.
Oh, that would be great.
It's funny. Last night, Angie and I were out eating down the beach.
Yeah.
And the table next to us, what ends up happening, because so many kids go to school in Boston, the parents are talking like, they just love to go up to Boston, visit their kids. And we're at the next table over.
Sure.
And they said, the other couple said, why? He says, go to the North End and go to Mike's Pastry.
Oh, really? Okay, that's great.
It's so funny. Right? Remember I showed you Mike's Pastry, right?
I do.
11 o'clock at night, folks.
If there was a parking spot, we would have stopped.
No, I know. And then Victoria Cafe.
And right next to the coffee place.
Get in there and have your Zambuca. Beautiful thing. Unreal.
I love it.
You stay right there, folks, because we're going right from beautiful Clearwater up to Newton, Massachusetts. Basil Chapman's going to be growling problem with you for a couple hours. Then we're going to come back here. David's going to be on 3 to 4 and back here 4 to 6. Have a great one, folks. Have a safe one.